There's a strange situation today, particularly evident in 2020. Central banks are buying everything. Different central banks are doing different things at different speeds with different nuances, but let's face it, they print money out of thin air by adding zeros on a computer, buying assets that do not exist, and are very adamant in the public that they're helping the middle class. Instead, consider another, more realistic possibility. You came here for the truth, so let me unveil that for you. I want to get into what's really going on behind the scenes. These central banks, they come out and they tell you that they are actually helping the middle class. But as I explained just a moment ago, they print money out of thin air and they buy these assets like debt, which is a non-existent entity, and yet somehow they have masqueraded all of this as being beneficial to you. It's nonsense. Let me get into what's going on at different central banks around the world. I want to cover everything you need to know. Let's begin. First, we'll start with the Federal Reserve. Of course, everybody knows what they've been up to. If I show you just recently, they have been printing an excessive amount of money, as you will hear me say over and over in this video, $6.7 trillion. And of course, we know the direction, and that is up. All central banks, all activity has escalated dramatically throughout this period of 2020, as you have seen the economy go in the exact opposite direction. So you could see that the total number of people employed, the business closures, everything is showing down, down, down. Freight is down, business activity is down, everything's down. Yet, when we look at the central banks and what they're doing, it's all up. They claim that this up is related to trying to give it a boost, trying to pump that economy upward. But as I explained, the actions that they are taking do not correspond. So they can tell you one thing, and for the majority of people, they'll just believe whatever they're told. But those of you who are actually looking into it, and I know if you're watching this video, you know what's going on. They don't want to help you. They want to create a wealth transfer from the middle class into the hands of the few. And they are doing a very, very good job of it with the Federal Reserve since 1913. Here we're looking at the ECB, essentially the same thing as they had suggested not that long ago, that they weren't going to do any more QE. That's it. It's over. We are just going to leave interest rates really low and we'll see what happens. But of course, they decided to do the exact same thing in through 2020 and beyond. It looks like they'll be escalating their balance sheets as well. It doesn't matter which one you look at. The direction is all the same. Here's everybody's favorite, the Bank of Japan. And of course, over these last few years after the financial crisis, they started printing like crazy. They started expanding into ETFs. They own 80% of the ETFs. You have to think about how crazy that is. They're the only buyer, basically. For the government bonds, they own, I think it's 40%. The numbers here, of course, are off the top of my head, but it's an extreme number when you look at all of this and see how much they have really done. I've got more to show you. There are two major resources where you can find this data. Now, number one is the Fed website, which is the St. Louis Fed website, and they have all kinds of charts. You've seen them here before on the channel. But another one that is lesser known is Yardeni, YARDENI.com. And of course, I will have the link in the description. But there's these reports that come out consistently. I think it's a weekly report, and you could see on here, I'll show you some charts right now that are compiling all of this data. And in this case here, we're looking at the total assets of major central banks. Let me give you a breakdown. The red line is the Fed. Then we look at the ECB, the BOJ, and the PBOC. The one that spikes up like crazy, of course, is the Federal Reserve, and they're measuring it in trillions of dollars. The Federal Reserve is in the lead, if you want to think of it like that, 6.6 trillion. Beyond that, we have the ECB at 5.8, the BOJ 5.7, and the PBOC at 5.2. When you add all of this together, think about how much money has been printed out of thin air, and almost all of this has been pumped in since the financial crisis. That's what's so crazy about it. Now, all of this money here, what's it doing? Going to productive use? Of course not. This money that has been pumped in out of thin air, garbage fiat currency, has been used to buy everything. Depends on which central bank you look at. The Federal Reserve now going into all kinds of new territory. They did this around the back of the Congress. Nobody even cared. Nobody even tried to stop them or ask, what are you trying to do? It all passed through very, very easily as the people, the analysts, the corporations, everybody cheered them on. If you look at what the ECB is doing, they've been buying corporate debt for a while. They've been actually buying basically everything as well. The Bank of Japan, we know what they've been doing. It's been crazy. PBOC is a little harder to find out the details, but they have been printing up all kinds. They have subsidiary corporations that buy stocks as well. So they've been getting into every single territory, just like we've been seeing with the rest. The chart at the bottom shows you the major central banks' total assets in the trillions of dollars. And of course, we've seen this little spike that has come here, and it is actually reaching over 21 trillion, coming very close to 22 trillion at this time. Just imagine that for a second. $22 trillion that does not exist, printed out of thin air. And who has given them the authority to do this? Who has decided that these big establishments are able to do this to your currency? If you look at the Federal Reserve, all right, that's supposedly the central bank of the United States, even though when you look at it on a deeper level, of course, we know it's not. It's really just a foreign institution. But who said that they're allowed to print up $6.6 trillion, buy everything from ETFs, municipal bonds, junk bonds, mortgage-backed securities, and essentially eliminating the risks, not for you as the individual. If you go to the casino today and you start betting like crazy, are they going to bail you out when you lose your shirt? You're going to be walking home topless. That's the way it goes. The big banks, however, they get the bailouts. They get everything. Oh, right. But it's only a loan. It's only a loan, GPS. You're always talking like this, and it is so horrible, blah, blah, blah. I've seen this stuff all the time, and it is nonsense. We need to get to the root of the problem, and that is clearly evident right here. Nobody gave these institutions any sort of authority to do this. I don't care about what act has been set up. You deserve the right to maintain the value of which you earn, and they destroy that every single day. All right, here we go. Total assets of major central banks. You can see the yearly change. Now, this has seen a shocking spike upward as expected when you look at how much money has been printed into a short period of time. When we look at this throughout 2018, we saw this major contraction at the amount of money that was printed in. So, of course, there's still an excessive amount. There's still 20 trillion out there, but the rate at which they're pumping into the system slowed down dramatically. And guess what happened throughout 2018? That's right, 93% of assets were falling. Now you look at the exact opposite trend, and even to a more exaggerated degree, because this is what they have to do, and look at the stock market. The stock market has been reacting very positively. In fact, if you look at the chart at the bottom, S&P 500 and assets of major central banks, well, we see a complete correlation between these two. Should that be a surprise to anybody? If you look at this from 2018 here up until 2020, when we looked at the central banks, their balance sheets weren't expanding. And of course, what happened during that time? We had volatility in the markets. They couldn't push past certain barriers. The S&P 500, for instance, it was dealing with the 2,800 level for a while. Then it was the 3,000 level for a while. Then it comes back to 2,800. We had some serious setbacks along this way, and there were other things geopolitically that were happening and so on. But if you're able to see this, I know the font is small, so you definitely want to be able to get the link in the description to see this for yourself. Regardless, the expansion of the money supply, expansion of the markets are completely correlated. I've talked about this many times before, and in fact, I'm going to link to a video at the end of this one, all right? It is 60 seconds long, okay? It's something like 60 seconds, the money GPS. If you search that, you will get it. But regardless, at the end of this video, I'm going to put it there. I explain the correlation between the two, and I made the video 60 seconds just to explain my theory simply and then refer to it consistently over time, and we could see how it plays out. Right now, that theory is definitely matching up to what we have seen. This just shows you the major central banks' total assets of the Fed, ECB, BOJ, PBOC, yearly percent change. That's at the top. But I really wanted to focus at what we are seeing on the bottom, which is as a percent of the local currency nominal GDP. And we can compare the different central banks. I do believe that they're all trying to beat each other in a way, where we have the Federal Reserve starting to increase the amount that they're printing in terms of GDP at an astronomical rate. But at this moment, the Bank of Japan has gone far beyond any of the others. It's unbelievable to see it because, of course, you can take smaller economies, and if they print a certain amount of money, it might not look as extreme, of course, but when you see it as a comparison with their economy or the GDP, it's sort of freaky sometimes how far these central banks are willing to take it. They get desperate, and it's a sort of self-fulfilling prophecy. It's an endless cycle that destroys the currency, it destroys the country, it destroys savers, and ultimately the middle class evaporates. This was interesting. If you look at the US treasuries and agencies held by central banks, at the top, look at the blue line. That's the foreign official dollar reserves. Look at the red line. That's held by the Fed. They've been expanding it, and they're the biggest buyer. You don't have to worry about anything because the Fed monetizes the debt. And this is when you know you've got a serious problem. It is clearly evident right here on this chart. People need to know this. And then we have the Swiss National Bank. Don't forget about them. They're basically a hedge fund, and they've been aggressively and actively investing in the US markets. We get this information, of course. I have outlined in previous videos where to get this, but between the fourth quarter of 2019 and the first quarter of 2020, they have been really big buyers of Apple and Microsoft. Those two stocks, of course, have done very well. Average quarter-over-quarter increase 22%. So they went well into this, just like we've seen with Norway as well, going further into equities, putting more risk on, believing that now is the time. We'll see. Two quick updates here. Number one, Fed outlines terms for lending program and promises full disclosure on PPP recipients. That's right, the Federal Reserve, totally transparent. Everybody loves them. I know you do as well as I. They are just so fantastic, and I'm really grateful that they're going to be open and honest about all of this. It's just fantastic that we live in fantasy land. And then we move into this one here, which is the Fed is starting its program to purchase corporate bond ETFs. This line right here is basically talking about something I had been mentioning over and over again, and we're talking about the fallen angels. So essentially, we have the Federal Reserve coming in and buying up these different corporations' debt that were about to fail, that would have eventually failed. So if you run your business terribly, if you've got problems for one reason or another, you don't need to worry because the central bank is going to bail you out. But if you, as an individual business, a small business, you own a bakery, you own a corner store, you didn't do anything necessarily, you had customers, but for whatever reason, you don't anymore, they're not going to bail you out. They might give you a loan, but of course, what does that really do? That just delays the inevitable. You cannot compete without being able to remain open for business to come in. Big businesses are going to be extremely happy about all of this in the medium term. Alright, that's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for doing that. And of course, all the support I get through Patreon, through PayPal, from any source, I really want to thank you as well. If you watch the ads at the beginning, that's appreciated also. It does help me. If you want to get information from me through Twitter and Instagram, I'm on there as well at The Money GPS. Learn how to sell stuff online. I assure you, you will be happy you did, but don't pay anything to do so. Check it out. It's free. I created it, theamazongps.com. Understanding the financial system is critical. All of the stuff I was talking about today, I've explained this in my books. The vast majority of people don't know it. I hope that you will be one of them that actually wants to know stuff. Check it out. Link in description if you want the audiobook, themoneygps.com. This is a 60-second video that will explain what I'm talking about here, how the central banks print money and bring the markets up or down. Check it out, click on it, I'll see you there.